Another wonderful day here working from home. In the midst of all this, we wanted to provide some additional information for all of our personal clients this time in ways that they can help save money on costs around their home, as well as what's going on currently in the mortgage market. And to do that, we brought in one of our trusted referral partners, Ryan Stephens with Watermark Capital. So I'm going to pass over the mic to him, let him tell you a little bit about himself and his company, and then we'll dive into some helpful hints for you guys moving forward. So Ryan, take it away for us.
Awesome. Well, thank you, Brad. Hey guys, my name is Ryan Stephens. My company is Watermark Capital. You probably haven't heard of us. I was part of opening the first branch in Texas, but we are one of the nation's best small lenders. So if you go online, you can Google Zillow reviews for Watermark home loans. And I think at this point we're up to almost 1,000 and we're averaging almost 5 stars. So really well known nationally, headquartered in California, unfortunately. But we have the only branch here in Texas, and I was part of opening that last year. I have a unique background from maybe most mortgage lenders. I started out before this in the financial planning realm, working with a team that was in the top 5 at Ameriprise Financial, and was there actually right before I left to come to mortgage in 2016. The last time we had a really serious market correction was in 2016, and actually saw that happen and heard the phone calls as clients called in panicked, and it was an interesting way to kind of see that all go down that summer, but made my entrance into mortgage at the invitation of a friend who was a loan officer, and combined the skills that I had learned over there with this now going on 4 years, trying to really help people make sure that they get the best home loan for them and not just whatever their loan officer thinks that they should be in, really trying to work to make sure people accomplish their goals with their debt.
Oh, absolutely. And I can speak from personal, reference that you do a fantastic job with the people you referred over to us, and they have nothing but fantastic things to say about you and in the company. And I will say, knowing you for the last, 2 years or so, you really take interest in your clients and what's best for them. It's not just about closing the loan. It is what is in the best interest of the client, which some mortgage, brokers, like we talked about, we actually had a conversation earlier this morning, are just trying to push loans through to put food on the table. And you're looking at it long-term as what's in the best interest of the client. So having that financial background helps you a little bit to say, hey, this might not be the best time to go move forward with this. Let's wait it out just a little bit. So with everything that's going on right now, kind of tell us where the market's at. What are we looking at? Or, have rates gone down? Have they gone up? I know it's fluctuating from day to day. So what does that look like right now?
Yeah, day to day is one way to put it. Hour by hour, maybe another way. Like yesterday, I locked a client on a 30-year fixed at 3.25, so 3.25, about 11 o'clock in the morning. And by the end of the day, his rate would have been like 4%. So we're seeing these humongous swings even in the day, before the day is out. It's actually, at this point, rates have kind of detached from the normal indicators we watch. So it used to be that we could watch the value of mortgage bonds, or we could watch the S&P or the 10-year treasury, and we could kind of guess where rates were going to go. But at this point, it's just totally detached for a couple of reasons. Number one, banks are completely overwhelmed with refi volume. They don't really even want any more. They're trying to clear their pipeline as fast as possible. And then on the other side, servicers, the people that hold loans, are just getting their shirts taken by margin calls. In the past, traditionally, they've shorted the mortgage bond market. And with the Fed driving the value of mortgage bonds up as part of their stimulus, they're just wringing the washcloth out of servicers. And so the back half of the mortgage industry is just losing. I've heard of servicers writing 8-figure checks a week in margin calls. So the mortgage industry as a whole is bleeding. That just means volatility. But in general, rates are low. In general, like low to mid 3s. Except you run into these moments, like you said, I have to watch for people because you can lock somebody at the wrong time, and it could potentially cost them half or 3/4 of a point if you're not careful.
So do you see it just fluctuating for the time being and just having to watch it, I guess, basically on an hour by hour basis at this point until we get a little bit more of a stable market presence?
Yeah. So basically my approach is I talk to somebody interested in a refi. I figure out if they're interested in it. If they are, we set an expectation of what rate we're hoping for as a goal that's realistic. I coach them to make sure they have a realistic goal. We get their application in and ready to lock, and then we wait. And when that rate becomes available, I have a system that alerts me when that pricing becomes available. And I call them up and I say, it's time to lock, and we get it going. So it's a good system, but it's a little bit, it's eerie. It takes patience, and it's kind of, I can't really guess when we're going to get it. So the guy locked yesterday, I think he waited like a week and a half for that rate.
Well, and like we mentioned earlier, though, that's one of the advantages of using somebody like you is, you're going to take that time. You're going to tell somebody, hey, just have the patience, wait. It's going to get a little bit better than what it is now. Don't just panic and rush into locking something that you're going to regret long term. I know, refis are just a hot commodity right now, or they were, in a last week or so. So in addition to those people that are, have already refied and so forth, if we're locked into a mortgage right now, what are the options for a little bit of relief during this, coronavirus and all this pandemic? So there's a lot of different rumors going around as far as, I can, defer my payments, or I can pay a little bit less, whatever it may be. Tell us a little bit about what's going on with these mortgage companies.
Yeah, so this is kind of an interesting topic in mortgage as well. I'm on a Facebook group with about 6,000 loan officers around the country. And any given moment, you'll see a topic on this, and it's filled in the comment section with loan officers who are like, I haven't read this, I don't believe this sounds like a rumor, and nobody seems to agree what the truth is right now. The truth is that it's kind of subjective. So in general, here's some good things to remember. Never make an incomplete mortgage payment, ever. So without actually taking some proactive step, don't ever just not pay your mortgage payment, or don't ever pay less than what is due, because that will absolutely wreak havoc on your credit score. Your payment is still due. Your payment is not quarantined. It is still due every month. But then what's the deal with all these rumors going around, like you said, of deferrals and forbearances and all this? So the general consensus is that the government is leaving it up to the individual investors to decide how they want to handle relief. They are sort of requiring them to offer some relief. But basically, in general, if you've got a loan with Wells Fargo, you need to call Wells Fargo. If you've got a loan with Chase, you need to call Chase. Okay. Buyer, owner, caller beware. I think Bank of America said they took 150,000 calls on this weekend. Wow. You just imagine the call times, the wait times on hold.
Oh, yeah.
Hopefully they have like some really good music while you
I doubt it. The horrible elevator music that we're all accustomed to.
Oh my gosh, I can't even. So you have to call whoever has your loan, and you need to ask what the options are available. But in general, this is kind of what we think it is. As I talk to people who've been exploring this, it's going to look kind of like a forbearance. So in other words, it's going to sort of be a delay where you're not going to have a payment for a few months. In some cases, I've heard 3 months. In some cases, I've heard 6 months. But it sounds like there actually is an option where they're going to give you the chance to delay your payments. That's also probably not going to come with a negative credit hit, as long as you, again, call them first.
Right. Don't just quit, not pay.
Yeah. Now you need to ask that question when you call. So question number 1, what are my options? Question number 2, is this going to hurt my credit? It sounds like the government's standard for whether or not you qualify for this is pretty low. The government basically just said you need to, quote, affirm that you've been affected by COVID. There's no sort of requirements on proof. Like you don't have to show that you've been laid off or anything like that. I think it's just, it's pretty slack, which is worrisome in some ways that too many people are going to take advantage of this. But then the third question you would ask, I think, is what happens after that period is over? I've heard rumors that some investors are going to require a lump sum at the end. So in other words, if you've been skipping your $1,500 mortgage payment 3 months in a row, they might in 3 months tell you to bring a $4,500 check to them for the time you've missed. So that would be something you would want to know up front. And then in some cases, Brad, have you ever seen or heard of somebody whose property taxes go up and the bank sends you a letter that says your payments are going to go up to cover the future higher property?
Oh, absolutely. Absolutely. We live in Fort Worth. So, the property taxes don't go down.
That's right. They don't. So banks are used to this, right? Of like spreading the love out. So there's also some discussions that the bank might also, at the end of that period of forbearance, they might raise your mortgage payment to cover the amount that you owed for the time you skipped. Because think about it, how many people actually pay off their mortgage in the U.S.? Like a bank's not just going to tack that on at the end. They're going to want their money. They're not charities. And so you just need to know that the way I'm warning people is this COVID shock to the economy, going back to my financial planning, is likely almost definitely going to cause a long-term recession. And so I'm warning consumers that not to get too excited about the short-term gratification of a deferred payment. Remember that it's going to have long-term consequences, and you don't want those long-term consequences to hurt you more than just paying your mortgage payment right now when things are tough. So that's a really difficult decision someone needs to weigh before they just jump on not having a mortgage payment.
So anytime the wonderful government starts to get involved in things, that means people are going to start tightening up some underwriting requirements. Are we seeing people, as far as the new purchases and refis, are banks changing their underwriting requirements to be a little bit more stricter now?
Yeah, absolutely. So some interesting things have happened. I have seen any of the non-traditional products like bank statement loans for if you're a self-employed person, you have difficulty showing income or something. Right. Those are gone. Those are literally gone. Like there was a series of about 3 days last week where one by one we got letters from our investors that were like, we're not offering these anymore. We're not funding the ones you have. And they just turned the spigot off on alternative products because they're too risky. And so I've seen some discussions that like the FHA and the USDA may raise the minimum credit score standards. Okay. So they may make it harder for people with lower credit scores to qualify. So we are seeing some tightening down. And then like on the refi front, what's super interesting is going back to when I said banks really don't want them. I'm seeing some big box banks that I won't name that are giving guidance to their loan officers that they have to lock their loans on 75 plus day locks, which makes your interest rates higher. They're making it where you have to save a certain percentage or a certain dollar amount to even lock the refi. So in other words, they're not just letting anybody lock any refi they want. So I'm actually getting cases where people are calling me. I had one last night where a big bank sent them away and told them to come back in a few months.
Wow.
Another reason to call somebody like me who's local that I don't have those restrictions. But yeah, the industry is responding to the increased risk by tightening down.
So if you were going to refi currently, what are going to be some of the things that somebody's going to need to send to you to kind of take a look at, and what justifies, is now the right time for me to consider refining my house, or should I wait? I'm sure it's going to be case-by-case basis at this point.
Yeah. So in general, you're going to have a hard time finding a better time to refinance than where rates are right now. I've actually never seen a 30-year rate at 3.25% in my career before. This is the first time. And so that in itself is awesome. What I want to look at is somebody's most recent mortgage statement. That's really all I need. And then for them to kind of guess their credit score. And then really from there, it just outflows into a conversation of, everybody knows refis have costs. So there's fees that go along with refis. And then there's also the component of filling up a new escrow account if you choose to use an escrow account. And that money has to come from somewhere. And so it really becomes a conversation of how much loan is somebody willing to, how much are they willing to increase their new loan amount by to cover those costs, or how much cash out of pocket are they willing to come out of? And then for most people, we're trying to lower their mortgage payment. So it's just a discussion of, this is how much the refi is going to cost. Right. And so what I'm saving worth that. But we're also seeing an interesting one that I've done a few of. Actually, personally just did this, where we're seeing a lot of consumers who are able to turn their 30 years into 20 years and barely increase their monthly payment. And so that's a really interesting refinance that's happening right now that's never really happened at least not since maybe the financial crisis, where I can take somebody's 30-year loan that maybe they're 3 or 4 years into, and I can essentially shave 7 years off the repayment by turning it into a 20-year, and their payment will not go up a whole lot. And that's super interesting to some people. So it's basically, give me your mortgage statement. Let's talk about what your goal is. Do you want to lower your payment or pay your house down faster? And then figuring out if the cost is worth it for you, you know.
Well, say we've just refinanced, or we can't refinance right now. It's just not feasible. What are some other options to lower those costs besides calling and deferring payments right now? Are there different solutions? I know, home insurance is one. That's always a good way to kind of lower your costs and so forth. Check and shopping your insurance every year. It's just like taxes. Taxes go up. Insurance seems to go up over time. The advantages of sticking with one company isn't the same as what it always used to be. So shopping those on an annual basis, especially right now during these times, can be a quick way to save some money and kind of lower those mortgage costs, so to speak. It's dependent, again, on what your taxes and so forth do, but there's advantages to it, of course. But what, in addition to that, on your end, do you see that people could take advantage of?
Yeah, and I was actually going to plug insurance as the first one, because if I understand correctly, you can tell me, but you can change your home insurance any time of the year. You don't have to wait for your insurance renewal to come up. And so the cool thing about that is, like, if you need immediate relief right now, maybe you're way overcovered, or maybe there's just a better policy out there if they call you, you can get their new policy in place. They can call their mortgage lender, and their mortgage lender can update their escrow amount, and that will lower their monthly payment. Not immediately, but in the months to follow. So that could be good relief for sure. And then, other insurances that they have, like home, like auto insurance and business insurance, you can help them with as well. Because a lot of times when I'm helping people manage debt, I'm not just looking at their house payment. I'm also looking at any other debt that's going to show up at their credit report, Other ones that people often forget, you'd be amazed how many times I talk to people who haven't done these, but filing any exemptions you qualify for. Actually had a conversation with one of my best friends last night about refinancing his house, and I realized that I did his mortgage for him 2 years ago, and he didn't file his homestead exemption in time.
Oh, no.
And they increased his taxes 40%.
Oh.
Our conversation about refinancing turned into a conversation about getting in touch with the county and getting that lower
As fast as possible. Yeah.
Yeah. So homestead exemption, if you're over 65, there's an over 65 exemption. If you're disabled military, there's something like that. There's lots of different exemptions. The way you go about finding out what you qualify for is you can talk to your mortgage lender or your realtor. They know. You can also go to your county's appraisal district website. So just Google Dallas Appraisal District, Tarrant Appraisal, Johnson Appraisal District. Every county has their own. And then there's a list of exemptions on their websites. And then it's free to file. So you just need to print a form, fill it out. Usually you send in your driver's license, and it's as easy as that. There's services out there that will say they'll do it for you for a charge, but don't pay them. It's so easy. I will help you if you need help. But the cool thing about those is, like, the homestead exemption, it reduces what you owe on your school tax,
right,
by quite a bit. And it also prevents the county from raising your taxes more than 10% a year. And so that's super important to make sure that you can survive going forward. And then the over 65 will freeze your taxes to a certain extent and keep them at a really low rate, which is very important for people on a fixed income. So I would say, number one, it's check your exemptions. Number two, you said you just, we were talking before the call, you said you just did this. Check to find out how soon your private mortgage insurance will fall off. If you have any, the way you do this is the same way you check on deferring your payments. You call whoever has your loan, and if you have mortgage insurance, just simply ask, how do I get rid of it?
Right.
And they may require you to come up with some cash up front. So they may say, you're about $3,000 away from that in terms of, because it's based on the equity versus the value of your home.
Right.
Or you may be so close that they're willing to just have you do an appraisal to make sure your home is worth enough to drop it. You may be so far into your equity that they'll just drop it. So it could be any range of that, but that's worth a conversation, because I, in general, see people's mortgage insurance being about $50 to $150 a month. So if you have the bandwidth to call your servicer and ask that question, definitely worth it. And then the last one I would say, this one applies for people who've been in their home a good amount of time, have a really good amount of equity, and your loan is old. Your loan is 8 to 12 to 15 years old, and it doesn't make sense to refinance and start that amortization over again.
Right.
Most consumers have never heard of a recast. Recasting your mortgage is a really unique option. What it is, most consumers will be allowed to do it one time through the life of their loan. You call the bank or whoever has your loan, and you say, I'm interested in finding out what I need to do to recast. And then here's what they're going to do. They're going to require you to pay a fee. It's usually really small, like $300 to $500 or something. And then they're going to usually make you bring a lump sum of money, and it might be as small as a few $1,000s to, I've heard of it being 10% of what you still owe, which if you don't owe a lot, that may not be a lot.
That's terrible, yeah.
Exactly. What they'll do is they'll look at how much you have left on your loan. And remember, when you get a loan, your payment's based on the starting number on that loan, and the payment never changes. So even if you paid $100,000 of your equity, your payment's still the same. What recasting will allow you to do is that lump sum you pay will go towards the principal. So it'll reduce the principal by a little bit. And then they're going to recalculate your mortgage payment based on what you have left.
Wow.
And it doesn't change your rate, and it doesn't change how long you have left to pay the loan, but it's going to lower your monthly payment substantially. A lot cheaper than refinancing. It's a great option for people who, again, have been in a loan a long time and don't necessarily want to pay the fees or start over on a refi. Not every bank offers it. Some don't do it anymore, but a lot do, and I've seen it done. So it's worth, that word again is a recast, and you just call and ask the bank what their policy is on recasting.
That's interesting. I never even knew about that. So that's definitely some beneficial information. So you at least have to be prepared with a small lump sum in that scenario to be able to put down to recalculate basically what you'd owe.
But exactly. But if you think about it, it's crazy. Like, I don't know, let's just make up a number and say that, it's $2,500 that they want you to bring you. First of all, it's your money and you're paying your principal down with it.
Right.
So it's not like it's their fee, and then if you say you're out of pocket $2,500, well, what if it lowers your mortgage payment $300 a month? I mean, you're going to make that $2,500 back up really quick, and then have some positive cash flow you can use, to get back in the market when the market starts to rebound, or even just pad your savings or protect yourself,
Absolutely. Especially if this thing lasts longer than what we anticipate. So, so we talked about it a couple times, and we brought it up a lot, both of us, maintaining your credit during all this. So credit is weighed heavily with a number of our carriers on the insurance side. I know we've had a lot of conversations with people that, we know that things are, moving more difficult for all of us. Try to not leverage credit as much in that case, because we don't want to overutilize and start to affect your credit score, which is going to affect a whole lot of things, including insurance. So what advantages as far as, the mortgages and so forth? I know credit's a huge factor in this, but what can people do to, maintain that credit, manage their debt and so forth as well?
Yeah. So again, I'm going to go back to my number one rule of debt, which is don't ever make unilateral decisions about your debt without talking to the entity that holds your debt. So in plain speak, pay your debt. It literally does not matter if it is truly the end of the world. It is not okay to not pay your debt ever. You cannot decide that. You can call. So always call. And if you're in desperate need of some relief, call the people who are able to provide that relief, like your banks that have your mortgages or your car payments or things, and ask them what they can do. I would say number two, you've talked about, not over leveraging debt. I would say don't do crazy things, like don't take a cash advance from a credit card to make your mortgage payment. Don't, if you can avoid, if you can go into some sort of deferment on your mortgage, as long as you understand what that looks like, that might be a better option than pulling money off a credit card to pay your mortgage with. Because remember, your mortgage might be 5% interest or 4% interest, but it's not 25% interest. And so if you start digging yourself in a hole with credit cards, you might find yourself in a hole that you'll never dig out of, So that's a very, very important thing. And look, all this is really important because, think about this, like I live in a nice home. I enjoy it. It's beautiful, but just because I can afford it now doesn't mean I always will be able to. And so if I were to get behind on my payments now, and then for some reason I needed to sell this place and I needed to buy a smaller place, well, if I've wrecked my credit score during this difficult downturn, I'm not going to qualify to buy another place, and I'm going to find myself in a one-bedroom apartment that doesn't check my credit score to rent there.
Yeah.
And so it's so important to remember that you have to protect your credit at all costs in these events, because if you need to bail out of where you live and find somewhere cheaper, your credit's going to be important whether you're renting or buying, And so it's all about calling places and asking for help. And then don't be afraid to ask your neighbors. There are people in my life that I love deeply that if they called me today and needed to make a mortgage payment, I would make it for them, And hopefully in your life and everyone out there, you're blessed and there are people you can call. But I keep saying this is an age of asking for help. And everyone out there wants to know that they can help anyone that might need it. And so if you start to fall behind, rather than just secretly not paying your loan and feeling like a loser, ask for help. And then maybe you pay that person back later or something. But definitely at all costs, protect your credit, because it is your financial reputation and it will help you survive this, whether that's qualifying for a new credit card or a cheaper car payment or a cheaper apartment or home or something, if this drags out into the future,
So the whole key word that I'm taking from this conversation is just ask. Ask the mortgage company if they're willing to defer. Give you a call. Ask if it makes sense to refi. Ask your insurance agent. And in our case, call the agency and ask if it makes sense to shop your insurance, if there's better opportunities out there. How can people get in touch with you? What's the best way to connect with you as far as if people have additional questions about, different ways to save money on their mortgage and so forth, or if they are, interested, they're kind of on the fence about, well, I've been in my house for a while, I think I have, enough equity to refi. How do they get in touch with you, Ryan?
That's a great question. Honestly, you can just Google like Ryan Stephens, Watermark, Fort Worth. I'm going to pop up on there. I like if people go to my Facebook page, you can look up facebook.com/watermarkfw.
Okay.
I post a lot of content on Facebook every week for people interested in the market and interested in rates and stuff. Or you can just call my cell, which is 817-205-2071. And you can text that number as well. But honestly, just Googling Ryan Stephens, Watermark, Fort Worth, I'm going to pop up on Google. And I've got some reviews and stuff. So I'm pretty easy to find online. And we can go from there.
Perfect. Well, I want to say thank you for joining me today and kind of giving, our clients, your clients some overview. We'll make sure to share this on all the different platforms so everybody can, be informed about some different areas to save a little bit, as well as, answering some of the questions of the uncertainty that everybody's going through with mortgages and so forth. So I really do appreciate you, joining us today, and hopefully we'll have another conversation.